Hi everyone, it's Jack Bauer with another video, and today I'm going to be talking about Etsy, which just released its earnings about an hour ago. Some really interesting numbers. The stock's actually up around 10% on the release of this, so clearly the market enjoyed this. I think a lot of that is due to the expectations being significantly lower than the actual results. So this company has actually had a really rough year, as many growth stocks have, down nearly 60% year to date. Obviously that's not including the 10% rise. It's about $87 right now. That's significantly above its 52-week low of $67, but way off its 52-week high of $307. Absolutely tremendous declines now, just $11 billion market cap, and it's actually transitioned more from a growth stock to a value stock in my opinion. There's previously a company that could only really be valued off price of sales. Now it definitely has earnings, produces a profitable company, free cash flow positive, and it's looking at a PE of around 25 on a forward basis, 30 on a trailing basis. Does this company have the growth to support that? I want to find out, analyse the results, analyse it's some growth metrics, some valuation metrics, and decide whether I think this is a buy, sell or a hold going forward. Like and subscribe if you enjoyed the video, and let's get into it. So jumping into the report, these are the three clear headlines. Gross merchandise sales of $3 billion. That's actually down 3% year over year on a constant currency basis. It's up 0.7% on a currency neutral basis. Obviously the strong dollar is affecting many businesses with an international presence. Etsy has a relatively large international presence, and the strong dollar has hurt it significantly, but it's not the end of the world. However, 0.7% gross merchandise sales growth is not particularly impressive for me. I would have liked to have seen a lot more on a, regardless that is at best flat, and we really need to be seeing growth here. However, revenue, because of some price increase, essentially revenue was up to $594 million. That's up 11.7% year over year. Steady growth and a strong take rate, averaging between 17 and 20%. It was actually at the upper bound, 19.8% for this quarter, which is very impressive. And adjusted EBITDA of $168 million. As I mentioned, this company is now profitable, consistently profitable, and tends to run at adjusted EBITDA margins around 28%, recorded around $200 million of operating cash flow for the quarter, which is very impressive. And this margin is kind of at the midpoint. It was in the low 30s and the end of 2021. It's been 27-28 all this year, and it's maintained that. Etsy's leadership have chosen to include a lot of 3-year comparisons, so comparing from 2019 to today, because it's obvious to everyone that Etsy had a lot of growth pulled forward during the pandemic. During 2020 and 2021, a large percentage of the sales were masks and things like that, pandemic-related items. It was banded in the so-called stay-at-home stocks, had a huge run up to over $300. It's getting firmly back down to earth now and is at much more reasonable valuations. And when you look at the growth this company has experienced in just 3 years, primarily due to that pandemic, and has held on to it, mind you, it is really incredible. 134% gross merchandise sales growth, 3 years. The business has doubled in 3 years, and they're having to accommodate a much larger percentage of gross merchandise sales. These 2019 comparisons are important because Etsy was essentially this price that it was now in 2019 or early 2020, and currently they have double the amount of active buyers to 88.3 million. More buyers are shopping more frequently. Those active buyers are increasing repeat buyers. It's up 800 basis points. Buyers are spending more with Etsy. The average gross merchandise sales is $135, whereas in 2019 it was $120. 33%, that might not seem like a ridiculous growth, but in that time just increasing people's habit is crazy in my opinion. And habitual buyers, where it's becoming more of a habit to spend, 7.6 million, that's a 223%. That's buyers who are spending $200 or more or may purchase on 6 or more days in the previous 12 months. So these are the core of Etsy essentially, and these buyers have increased 223%. So clearly this platform is made tremendous gains, and they're sticking around. We would expect, if Etsy was a purely stay-at-home play, we would expect these numbers to be dropping off now, and they're not. They're at least staying flat. A lot of Etsy's buyers were acquired during the pandemic, and they have not only stuck around, but they're still being adding new buyers at greater than pre-pandemic levels. So you can see that orange line is the average new buyers pre-COVID, and they're still exceeding this. They added 6.3 million new buyers in the most recent quarter, and they seem to be doing this on a consistent basis, which is really impressive in my opinion. That's less than 10% right now, but it's still making huge gains. And buyer reactivation is also significantly improving, so reactivated buyers is again above the pre-pandemic average, so they added 5.1 million buyers who have reactivated essentially. This quarter was obviously not the most impressive quarter in the world, but it just shows a general chugging along. They're continuing to impress in my opinion. While they're not blowing the doors off with growth, it's no longer a company that particularly needs to in my opinion, because of its valuation has dropped to levels where it doesn't require huge growth to maintain its multiples. For the outlook, where a lot of companies have fell down, is their outlook in these earnings reports. I think Etsy's outlook is reasonable but not overly impressive. Holiday quarter is obviously the most important quarter for Etsy and for many retailers, and it's traditionally the highest revenue quarter for Etsy by some distance. They're expecting gross merchandise sales of between 3.6 billion to 4 billion. That will be a year-over-year decrease if it comes in this guidance versus 2021, which is obviously a very hard comparison because of the general stay-at-home nature of that year. But 2021 recorded around $4.2 billion in sales, so it would take a significant beat versus guidance. But the market has a strong opinion of this quarter. It's up 10% right now, so maybe the market just doesn't think that this is that big of a deal. This is kind of where they were expecting it to be. Revenue of 700 million, 780 million. That's likely going to be above. Revenue last year was around 710, so at the lower range of guidance, but this is only going to be single-digit growth realistically, unless at the very top end. Adjusted EBITDA margin of approximately 28.7%, which is just about where it's been recently. So outlook-wise, not going to blow the doors off. We're looking at single-digit revenue growth and pretty much flat to a small loss of gross merchandise sales. Not overly impressive, but not the end of the world, and the market seems to think so as well. Next up, valuation. This is obviously a company from a margin profile and a revenue growth profile. This should be traded at a premium to the S&P 500. As a gross margin of over 70%, typically records net and operating margins of between 10 and 15%, a return on equity percentage of nearly 70%, and a return on invested capital of about 19% over the medium term, and it's been profitable for the last 5 years. This is a premium company in my opinion. Its revenue growth, 3-year revenue growth rate is around 49%, which is absolutely excellent, and its 3-year free cash flow growth rate is 44%, which is also excellent. I think this is certainly a company that needs to trade at a premium to the S&P 500, and right now it is doing so. It has a trailing PE ratio of around 31 and a forward PE ratio of around 25, and these are only going to go up in my opinion due to the likelihood that they're going to have reduced earnings in the future, as many companies have done. Currently, with these metrics, they are both above the S&P 500 averages, and probably the cheapest Etsy's ever been in terms of PE ratio. Its PEG ratio is 0.41, indicating that analysts really expect this company to grow at a pretty decent rate compared to its price. That is well below my bargain territory of 1. Under 0.5 is really super bargain territory. It's a price free cash flow of around 24, which for this growth and margin profile is not overly expensive, but I prefer to pay under 20. Overall, I think the valuation for this company is not conventionally cheap, but for a 50% 3-year revenue growth rate, 70% gross margins, consistently profitable, and wide moat in my opinion, with an increasingly widening moat, I think this is kind of a price that is worth paying. And that's kind of where I sit on this. I think this is a price that's worth paying. It's going to be a more expensive price tomorrow because it's likely going to go up 10%. Maybe if it comes back down, I'll be happy to pay under $80 for this company. I think if its PE ratio got towards 20 on a forward basis, I'll be very keen on buying this company. Its growth rate revenue perspective is certainly decreasing, and while it has excellent margin profile, and I would be happy to own this business because of what I think is a widening moat, and definitely think it can return to that $300 level sooner rather than later. It's just not really the best opportunity in the market right now, and I have a couple of stocks I would rather add to than Etsy, but I still think this is a fantastic business that will be significantly larger in the future, in my opinion, and it's trading at a relatively reasonable valuation. I don't think it's an absolute screaming bargain right now, but on a couple of metrics, it does starting to look like that. I think for 10% revenue growth rate, if it can maintain that in the future, that'd be excellent. I think for 72% gross margins, and I think that revenue growth rate really needs to increase. I think this certainly could be a reasonable price for this company, but not an absolute bargain. Of course, that's just my opinion. You should let me know what you think in the comments down below. Let me know whether you think the worst has been priced in for this company, because that's what it looks like from the market's reaction. Let me know what you think of the earnings report. Whatever you think, let me know. Of course, no, this is financial advice, so you should do your own due diligence and research, not just listen to what I say. And tell me what you think. Like and subscribe and enjoy the video. See you later.